God can do and have power. So God, thank you for everything you have done for us. Thank you for the night and thank you for the day. You are God and you are everything. So thank you for give us the opportunity to share our knowledge to others and bless others, bless us, protect us, because you are the only one that can protect us. Thank you for everything. Thank you for God. Thank you for Jesus who has died for us. Your name is great. Your name is great. Your blood has been shared for us. Thank you. You have been praised. You have been worshipped. And you are the one that can be blessed. Protect us. Give us more knowledge because you are the God. Thank you for everything. You are God. Jesus, thank you. Amen. Amen. So that's good to pray because anything that we can do is by the grace of God. Because God is the only one that can do great thing for us. Thank you. How's everybody doing? I hope so far so good. Today we're gonna share some quick technical analysis about the stock market, as you always know. So some people, they don't know how to invest in the stock. So myself, I always do more technical. So we're talking about indicators. But there is a way that you can invest for long term for those that don't know how to invest. If you don't know to invest or to trade, but you can invest for long term. By investing for long term, you have to look for great stocks. For instance, there are plenties of great stock. But those stock are the stock that can hold themselves, like Apple, like Microsoft, like Meta, SP 500. Those are the great value stocks. You don't invest in the small, like stocks that cannot hold themselves. We call them like monopoly stocks. And also, there are ways to invest in the stock. You don't put your money when the stock is high. You put your money when the stock is very low, when the prices go down. And you can do what you call, in the stock market, you can do what you call the dollar cost average. You can do what you call dollar cost average. That's being called DCA. So anytime the stock go to a level of support down, you put some money. For instance, I'm going to show it to you how you do that, for instance. For example, stock market been going high, been going high and low, high and low. So in high, low, high. So stock market going down, up. So when you invest your money, when you start put your money, you buy from the bottom. Because I know most of the time I do technical analysis. So now you buy from that point now. For instance, if you're gonna invest, if you have $1,000 and you want to invest it in Apple, because we have to always talk about big with company. You don't invest your money in small or company that's at great. You don't put your $1,000 at once. You don't put it one time. You can split it. You do what you call DCA. Because that D means stand for dollar, C stand for cost, and A stand for average. So anytime, or you can do what you call by low, very low. So anytime you start, you don't put your $1,000 at once. You can put like 10% of it. You can say you're gonna put like $100. You start invested $100 from that point. For instance, if the price of Apple is, like says, is $200, and then that's the price at $200. That's the price for Apple is at 200. We can start putting $100 first at this price, because you buy low. You start when the price is low. You know, with company get higher. The more value the stock get, the more value your money will get as well. So therefore, you put $100 there, and then start going high. You don't put nothing there. Don't put nothing. Don't put nothing. Some people will put, but you don't put if you want to make more money, if you want to invest when stock going low, because suddenly the stock will come back low, because stock market is doing only that way, going up, down, up, up, down, up, down, up, down. That's the way. So market doing two things, up, down, up, down. Sometimes it's been doing sideways. That's three things. But most of the time, whatever is going up, we come back down. Sometimes it's going back lower than was it before. So what you do, for instance, you invest $100, and then you have $900 left. And then it goes back again to the side here. If it goes that low, remember, this low is higher than the previous low. We call that higher low. This low is higher than the previous low. This low is lower. So this one is higher. So we call that higher low. So therefore, let me get some water. Sorry. If you're gonna put some money, since this low is higher than the previous low, you don't add $100 there, because this one is was low. You have to put more money when this was lower. So therefore, if you want to put some money, you can put $90 here now. 90. So therefore, you have 820 left. So you put 90. You don't put 100. See, and start moving again back low, high. You see, from there, that's a higher high, because these ones go higher. This one goes higher than the previous high. Now, see something. If you're gonna sell, if for instance you say, okay, now you have $190 invest. Now, if you, for instance, if you say, okay, I need to sell back here. If you want to sell, for instance, you say, okay, I'm gonna get some money. See what's the difference? 190, now you make some money. You might be make like $20 more. But if you have put $100, you will make only 110. So therefore, that's why it's always better to put less money when start going higher low. So lower low, you put more money. Higher low, you put less money. And therefore, again here, now it's go high. You don't sell because you invest for long term. You don't have to sell. I'll just give you an example. If you want to sell, you will make some money, but you don't have to sell because you invest your money for long term. So therefore, you invest for long term. Remember that. You're not doing like trade. You do invest because there are a difference. There's a difference between invest and trade. So when you trade, you buy low and you sell high. You buy low, you buy, you sell, you buy, you sell. But now you invest for long term. When you invest for long term, you can leave your money for 9, 1 year, 2, 3, 4, until 20 years more. Sometimes what you do there, you start going that point and it goes back low here. What happened there? This low here is higher. We call that higher low. This low here is higher than the previous low and then the previous low. So that therefore, this low is higher. We call that higher low. Anytime the low is higher than the previous low, we call that higher low, higher low. So therefore, this low is higher than the previous low. So if you have to invest now, instead of put 100, because here we put 100 there, you put 900. Now, instead of put 900 again, you put less than 900. You can put $80. See? You got 7 something left. So therefore, you put $80. You see what happened? When you put $80 and you have some money left. So what you will do there, and then start going now. You see what happened now? Is a higher low, because this one higher high, higher low. So this one is going lower than the previous high. So therefore, you just sell. And then start going here, back here, another higher low. You invest maybe 70, because this low is higher than the previous low. You can invest $70. You don't put 100, you don't put 90, you don't put 80, you put 70, because it's higher low. This low is lower than the previous low. So you put less money. So that's the way you do your money when you have money. You don't invest it. Now, back there is going high. See, it's moving high, high, very high. See, by investing 100, 90, 80, 70, from there, for instance, Apple start from 200. That's the price that stock start. Now, from that price, it might be going to 250. You see? So how much money you make now? Because you start investing for 200 when Apple was $200. Now the price get higher to 250. So by combining these two money, you make some quick money. That's the way you invest in the stock market. Another way you can invest. So I'm gonna show you when they start going lower. We call that lower low. So we've been doing from higher low. This one was higher low because previous all those low go high, all those low go higher than the previous, higher than the previous low, higher than the previous low. So now I'm gonna show you when they start going lower, lower low. We're gonna do another way. I'm gonna show you. Let me remove this. Don't forget, if you like this video, just do me a favor, just subscribe, like, and share. So anytime we got something for you, you'll be notified. Just subscribe and like, give me subscribe, please, and then and like. Anytime we got some technical, you'll be notified. Now we're gonna do a lower low. So start going high. Again, this is Apple. This one for you, take this way. It's Apple. Start at 200. Stock price $200. All right. Okay. Start here. Low. So you invest, for instance, stock. The price stock here. You have $1,000. So what you do, you start investing. You do DCA again. You start investing $100 at this price, and start moving high, and it's go that way and go low. You see what happened now? This low is lower. We call that lower low. So this is lower than the previous low. This one was that's that's the price you started back there. You start $100 there, and this low now is lower than the previous low. So what you do now, instead adding less money before we do higher high, lower low, higher low, higher low. So now what you do now, we do lower low. So now instead of adding less money, you put more money because it start going lower. So back there, you invest $100. Instead of adding $100, you put more. You can put 120. See, with $100, you got minus. You got $900 left, and you got 120 left. Here, you got 80 left. So that's the way you do. And then start going lower. You put $100. Let me just remove this so you can understand this better. You put $100. You put your $100 here. And start moving high because you're gonna start going up, down, up, down. So it's going high here. You don't put nothing here because whenever you start going high, that even look at it, wait for the stock, because you have, in the stock market, you have to have three things. You have to have patience, wait, and don't jump. So what happened? You get there and it's move like this slow there and then end and you go higher, lower. So what happened there? From this low here, you can put more money, because what happened? This low is lower. We got a lower low, lower low. So this one is lower than the previous low. Those two. So what you will do now, instead of put 100 or 120, you put more now. You can put 150. So you minus 150 for your it. So that's the way you do. So because start going lower than the previous low, you add more money. And again, start moving up, down, up, down, up, down. It might be going higher. If you want to get sell, you get, if you really need money, after a certain time, it goes there, because this one is higher than the previous, those two highs. So you can get some with money because you have been invest 100, 120, 150. So therefore, back there, you make some with money. And you can wait again, start moving down, because sometimes it's going to go back low, going lower, because certainly you will go back lower. One time, it can be after 1 year, it can be after 3, 6 months. Back there, what happened to this low is lower than those two previous low, all those low. That's when lower. So this low is lower. It's lowest. So therefore, back here, you can even invest like $200 or $250. You put more money. See, that's the way. I just give you an example, because I got people that's been losing money because they don't know how to invest for long term in the stock market. Because what they do, I'm going to show you what they do. I'm going to show you the one way people do it, because they don't know. So today I'm just giving you the big technique how to do it. So what most people do, so they invest, start going low, they don't listen, they don't put money there. They start putting money in there. From $100, they add $100 here. You're not supposed to buy high here. You have to buy low. And now start moving back here, low. You go low. They don't put money here, because this stock is not good. It's going bad. It's going low. They're scared. They don't know. They don't understand. They don't put money there. And now they wait for the stock to put higher here. They put another $200 here. See, you put 100, you put 200. That's $300 minus from your $1,000. You got $700 left. And not only that, you lose money because you put money stock. Because the higher the stock goes, that's they put more money. Stock moving high, low, low. They say, oh, stock's not good. Now they lose money. What they do now, they sell here. Now they lose their $300. They sell at this price here. Maybe they have only, from that $300, they have only $120 left, and they get out. They don't understand, because they buy low, they buy high. People buy high, and they sell low. No, you have to buy low and sell high. You have to buy low and sell high. But most people, they don't know. They just buy whenever they see the stock going high. They say, oh, the stock is good now. It's good. Let me buy. They buy. And then when they start going down, they say, oh, the stock's that good. I mean, they sell. No. You buy low and you sell high. You buy low, you sell high. You don't buy high and you sell low. That's the difference. So my friend, that's the way you have to invest your money, whether you do low or you do trade or you do investment. But whenever you do investment, because you don't have to be very, very good to buy for long term. As soon as you know the difference, those key there, where you have to buy stock very low and buy high and sell high. So what you do, you have to always do what you call, as I've been told you do a DCA. You do dollar cost average. So you buy always, whenever it start going low, you buy. Going lower, you add more money. You go higher, you don't worry about it. Go lower, you add money. Go lower, you add more money. With lower, you add more money. That's the way it's stuck. But you don't buy high and you sell low. You buy low and you sell high. That's the difference. So that's a big difference, my friend. So if you like it, just do me a favor. Subscribe, share. I just give you a great technique how to buy and sell. I'm gonna show you something now in the technical. So this is gonna be very short because we do some technical about moving average and all those stuff like MACD. If you want to watch more, just click on the link next to the video. Now, I'm gonna show you something here. Here. For instance, we have Apple there. Whenever you need to add your indicators, people that have a question, we just come up today to answer a question. Because I have people that was asking me how to buy in the stock market for long term. That's why that's what we've been covered here. The DCA. Buy low, whenever it start going very low, you buy. You don't sell high. You don't buy high and sell low. You buy low. The lowest they start going, you buy. I just cover that for you. Now, I have a couple of friends that's been asking me how to add moving average on your short. It's simple. I've been told you that before, but if you need to know more about it, we have a couple of video about moving average, how to add them. But whenever you go there, for instance, we have Apple. Those are the indicators. And don't forget, we have a class also. If you need to know how to use those tools in Trading View, see these tools there? We teach you step by step how to add those tools. It's a class, is only $100. That's very cheap, very low. You will not get this price nowhere. So if you want to get this class, how to use Trading View, we offer this class. Click on the link down there and it will take you to the class. We teach you step by step. Now, and also if you need to use Trading View app, we put a link also for you with a 15% discount so you can purchase a Trading View app. It's gonna cost you less money. We put two links for you, one for the class, how to use Trading View, and we teach you in the same class also, we teach you about those candlesticks, how to use them, what those candles means, and what do they mean in the short. We teach you those things. If you're gonna need to know how to trade, at least you need to know how to use Trading View because this is one of the best platforms. And also, we teach you about candlestick. Now, it's gonna be very fast. Whenever you add your indicators, any indicators that you need to add, you click there on indicators, and you look it for there. We teach you that if you take this class, you're gonna know those things by heart. And this, not only that, you will have this class forever because it's for you. Now, you click on any indicators. Anything that you need for yourself that you've been using, you add it as your favorite there. You see stars, that's my favorite. If you cannot find nothing, you just click on search and you type it there, for instance. You type it and look for it. Now, since you're gonna add moving average, because I've been using my moving average, those are the things that I've been using myself. I click on moving average explode. And you see, it's already been added to your shot. This is the line. Moving average is a line that's you add it to your shot. What the moving average does, moving average, I'm just gonna give you a bonus. The moving average is show you price action. Smoothing the price. Now, for instance, whenever moving average, the moving average is below the price, you see, below the price, which is price are candles, we call that price. Whenever moving average is below the price, stock is bullish. The stock is going high. Whenever the moving average is above the price, stock is bearish. So as you can see there, if you place your buy, you can place your buy back here. From that, as soon as you see the moving average dropping below the price, that's the time you buy. You can place your buy there. You can buy here. You can do a buy back here. You can do a buy here because moving average price, because you see this candle is going higher than the moving average. So the moving average just below the price. And then, and not only that, the moving average represents a support here. because this candle just sit at the moving average, you see? Just sitting there at the moving average. So that's a good place to buy. And you see, moving average still below the price, which is those candles. And then you make some good money. If you bought back here, price still above moving average, that's a good money. And then you can sell as soon as you see this red candle there. Some people will sell back here. I can sell here. You do a sell here. If you trade, you do a sell back there. Because what happened? Moving average, the price now here get below the moving average. See, price get below. I will sell back here, or you can sell. So people will wait and sell there. That's the way. Another way now. See back there. Here. Now I'm showing you when the moving average is above, that's a bearish. As you can see there, the moving average is above. Whenever moving average is above price, that's going down. That's a bearish. As you can see there, price is below now. All is there. See, if you do a short sell, you can start from there. Because here, back there, moving average is below, so that's a bullish side because the price is above. But from there, moving average cross now. See, cross now above. See, and now price is below. Whenever you see candles is below moving average, is bearish. Whenever you see candles is above moving average, is above. Whenever it's above, is bullish. Whenever it is below price, moving average is above. Whenever moving average is above candles, stock is bearish. Whenever moving average is above, is moving average is below, price is stock is bullish. As you can see there, moving average is below and price is above, so stock is moving higher. Moving average is above, price is below, so stock is bearish. So, my friend, it was a pleasure to be with you. Don't forget, if you like these videos, just do me a favor, subscribe, like, and share. And we're gonna see you next time. And this is Harry. We keep in touch. We have more video. And don't forget to take this class. We teach you about how to use TradingView and about those candlesticks. And we put a 15% discount for you if you're gonna use TradingView as your app or platform. Thank you. It was Harry. See you. Take care. God bless you. Take care. Bye-bye.